Good morning, this is John Piper with the weekend video clip, and it's Saturday the 20th of April. I'm looking here at a chart of gold. Interesting pattern on gold. You may recall all the hype up here. In fact, the hype continued pretty much relentlessly, so I can see to there, still around. I think just not long ago. It's evaporated pretty much. I mean, the gold hypers who are actually in the business of selling services and such like continue to hype gold, but then of course that's a business thing. It's a marketing decision. It's not really a market position thing, because I mean there may be position, but that's not their main purpose in life. Now, as I said before, this looks like a third wave. Now we have an A, B, C, fourth wave. I'm not saying it's complete at this point. There's certainly a case that if let me get rid of the arrows. Certainly a case that we've got an A, B, C, and B, and now either a 1, 2, 3, with a 4 now perhaps being played on a 5 to come. And there's a shorter term pattern I'll show you in a minute. But if it's corrective, then the worst of this move should be behind us. Now, from a longer term investment stance, that suggests that getting in even now is fine, in the sense that if the worst is behind us, you may suffer a loss of sorts, but it may not be significant, and if you're relaxed about the position, if it fits in with your investment portfolio and your own personal objectives, etc., then going in now may make sense to you. But if you think about spread betting, and obviously the situation is completely different in the sense that you could easily move another 100 points, maybe 200 points down. You can't really hold a spread bet in that situation. So there are these different parameters for people with a longer term stance, shorter term stance. Which one of the points I spoke about actually at the seminar on Wednesday, because it's a key decision. Are you a longer term trader or a shorter term trader? You can do both, but I think it's much easier doing both with different types of vehicle. Anyway, let's have a look at the shorter term action here to see what's been happening in the shorter term, and you can see that that's a 1. Rectangles again. 1, 2. Then got a 1, 2, 3. Now so far, it sort of reflects the pattern I've just been talking about. So far, all we've got is an ABC here. ABC. Nothing to suggest that we've had. Well, very little to suggest we've got a key low at this point in time. The point being that we have got this double bottom, so the thing gold has built a base, but so far hasn't done a huge amount with it. Now that might change, but the wave pattern suggests this could just be a fourth wave. So certainly a case that it's going to finish. This rally is going to terminate. We're going to see lower prices. Even more doom and gloom, even more headlines about how dreadful investment gold is, it's dead, etc. And the more we hear that, the better we know that actually the low is probably pretty close. It's the reverse psychology you got to get into when you're looking at trading markets. The gloomier everybody is, that's the time to buy, and the happier and euphoric everybody is, that's the time to sell. So right now, I'm not convinced that we've actually seen the low. I mean, I would have got in here if that spike came in at 2 o'clock in the morning. I was sound asleep, as I'm sure most of you were, and it's not really, and there's no way of really of trading us. You don't know if something's going to happen until it's after it's happened, or as it's happening. So without being there at 2 o'clock in the morning, it's difficult to catch that. I mean, you could have put some kind of entry in based on the previous low, but then it may have just gone straight through. So it's one of these things that with spikes you need to be watching the market. So right now there's a case either way. Overall, the wave pattern suggests lower prices, and so far we've seen nothing to change that. Let's go down the scale again, because it's they made these hourly charts, and let's look at the 10-minute chart just to see whether we see anything on that which might give us any clues. So you see we've got the A there pretty clear. We've got an A, B, C down to the spike there, and then we've got it's a nice rally, but it doesn't. It's not confirmatory. And let's have a look again at the action. Sorry, I've been for a long time on gold, but I know a lot of you are very interested in gold, so I think it's worth doing. If we look at the form of the decline here, there is a possible 5-wave form there. Not a very clear one. I mean, the very way of counting it. And so far, this rally here is also not that dramatic. So a failure here a move back below 1400 with the low here. The low there came in at 1392. May well make sense. I mean, those of you who use my extreme stop system might like to look at that low as a possibility for the extreme stop, but be sure to visualize a trade, what might happen. It may go against you. You know, where's your stop? How are you going to control risk in this situation? If you want to copy the extreme stop, I will put I'll put a link in the email this morning, so you'll see that. Right, have a look at pound dollar now. Okay, pound dollar is actually in a similar situation to gold, in the sense that we've got this impulsive move here, which looks like wave one. We've now got an A, B, C. It's failed at the 38.2% level, Fibonacci, which is a subnormal and feeble rally, especially as a wave two. And we're now seeing a sort of possible peaking process or a possible fall away again. The pattern is hardly ideal. If we go down to look at the hourly chart, you'll see what I mean. It's just a bit dithery right now. We've got nothing really to write home about, nothing to suggest that the peak is necessarily in. Okay, that's a 1, but there's no real form to it. Maybe that's a 2, another 1 maybe. Actually, there's a possible 5 there, I suppose, but it could be an ABC. Again, we've got the same parameter. We've got a possible ABC down, but that's also an ABC. That could be a 2, and now we're starting to motor. So again, we've got a case for extreme stop below that low. And again, you know, if this is the next move down, then it could be pretty vicious. So that may well be worth doing. But again, use risk control. Okay, here's an hourly chart of the Dow. What we have here is another 5-wave decline. I mean, there is a lot happening right now. Expiry yesterday wasn't that big a deal, but it was a very unusual expiry week with gold collapsing, quite a lot happening really. Possible 5 waves, so this could be a corrective move. If it's corrective, we want to go short, and obviously the low here would be a level for the extreme stop system. Same parameters apply. This is clearly a 5th wave. I've showed you that pattern before. I don't want to repeat myself too much. So in fact, the Monday and Tuesday after expiry are often quite significant days. So have to see how that goes. Really, nothing particularly interesting on the DAX or FTSE at this point in time. Right, here's the daily chart of the Nikkei. The reason I'm thinking that this might fall back a bit is mainly because we do have this possible 4th wave here. I mean, there's a number of 2 waves you can choose, but obviously the obvious 2 wave is that one there. So 1, 2, 3, 4, and then there's 5th wave up. In fact, there are 5 waves there as well. I mean, so there are alternative counts. I'm not altering our investment stance. We went long of the Nikkei some months ago, got in fairly well actually. It's been a good position. And I continue to think that the Nikkei probably has a lot of mileage to go. In a very different situation from the Dow, say, where the Dow's been going up for since 2009. Nikkei hasn't been. It's just started. The possible bull market here has just started up. The East, I think, is far more dynamic than the West, and of course, Nikkei's been through a 25-year bear market. It's pretty much shaken everything out of the system. So I think there's a much stronger case for investment in the East, and the Nikkei in particular. So even if we have seen major peaks on the Dow, which of course is possible, I think the Nikkei, although it would certainly suffer, it would certainly be a knock-on effect. I think it would maintain a lot more value, whereas the Dow, most of the markets are based on this zero interest rate thing, which is artificial and won't last forever. There is no real value there. It's just an artificial situation, which is dangerous, obviously. If confidence goes, and this bank thing with Cyprus is quite a big blow. I mean, as I said before, people in the city I speak to say that the euro is now finished because trust is gone. Who am I to argue? I think it's a big point. If banks start grabbing your cash, then you don't really want your money in banks, and that would be a major blow to the whole system, obviously. Anyway, there are the possible 5 waves. Let's go down the scale now and see what we have to see there. Go down to the hourly chart and just look at the form of this decline. Firstly, the 5 waves. 1, 2, nice clear 3rd wave. 4, and then there's 5th wave, followed by an A, This looks like a B. It may not be complete because this isn't. I mean, we haven't got a sort of fallback, but a C wave decline looks like it might be on the cards. Whether you want to play this or not is a personal decision. We have seen a peak, we have seen a pullback. I think, currently it's a correction type move. We haven't even got a confirmation on the Dow that we're going to fall back, but so it's a possibility. It looks like we could well see a decline. If it fits in again with your own portfolio, your own trading, then that's something you may want to consider. Okay, that's all for today. Hope you found that interesting, useful. I'm back with the report on Tuesday morning. Have a great weekend, and thanks for listening. Bye for now.